Whose idea was this? And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the little bobblehead sitting in the dark Scruffy trader. And why is that? Well, because it's an unearthly hour of 6 o'clock in the morning, and I'm doing a morning star trade. So, what is morning star, here you ask? Well, if you're not seeing the other videos, it's a forward test of a system to see if you can build a nest egg before you go to work. That's the general gist of it. Up to now, it's had its moments, but it's coming together. I've worked on this for quite a while. Strategy wise, it's incredibly simple, but it was a question of just refining levels and entry points and reasons for getting in, and that's what this is all about. And it's kind of starting to come together. So let me flip the screens over and we shall find out. So bear with me just a second.
Well, we're waiting.
There we go. Helps if you switch them on in the first place. Right, what's this we're looking at? Well, this is just a journal that I've made up of the trades. We're currently 11 open trades in and 100% strike rate with it, because the idea is one setup for a minimum of 10 pips. Now, that's kind of a loose guide. The idea is a minimum of 10 pips, so if you do 5 and 5, that's fine. But with the DAX, you can normally hit your 10 pips with one shot. So how do we do it? Or why do I do it, rather? Well, very, very simple. Well, the first thing we're going to do is we're going to fill this in. So we're currently at 83 a pip, and what's happening here is I am just compounding the wins and moving the bid up, so that each morning each 10 pips generates a little bit more. It's kind of based off this compounding plan, and eventually it'll become a wage maker plan. And I live my life on spreadsheets, and they help me map out what it is I'm trying to achieve. Okay, so just drop the date in. We're currently at 689.41, so that's not bad. A 37% increase on our starting balance of 500. And I put an arbitrary target in of £1,000 just to, well, it was just kind of double the account, if you like. If I do, it's brilliant. If I don't, it's not a big shake. But the idea of this test is about 50 trades and then see what we get at the end of it. So at the moment, our risk is still pretty brutal. If you go through the videos, I kind of explain risk. I seem to have to do it on each video because there's always somebody who kicks off about it. I've done this a long time. It is my living. I do know what I'm doing. And risk and profit are two separate things. And until you start realizing that, you're probably going to be losing a lot more than you're winning. A stop has one job: protect the account. That's it. It has nothing to do with the profit, has nothing to do with the trade setup. It is just to protect the account. That's all it does. And I think too many people try and shoehorn a trade trying to figure around the risk. Now, I'm not saying you go into the markets willy-nilly blind, but what you do is you go into the market informed with a plan, and part of that plan is the protection of the account. Okay, so that's that. But let's drop down and see what we are up to. Okay, now this is an hourly chart of the DAX, and it's actually quite a real dangerous chart to trade this morning, because there is a lot of pressure to the downside, as we can see here. If we take this further out to a 4 hour, you can see it is steadily moving down, so it is quite brutal. However, within these motions there are glimmers of hope and reprieve. Now when we come down onto a 15 minute, you can see it's dropped down. That was quite a dangerous point last night on the open, because it could have gone one of two ways. It could easily have squeezed down to here, but it's gapped up, it's moved up, it's come down, and it's steadily pushing across. So my kind of view is it is going to the long side this morning, but the longer term view is to the short side. But at the moment I'm just looking to grab my 10 pips. Okay, so I'm going to leave this as a single camera shot. We will be going long this morning, but I'm going to be very conservative with my entry and my exit, simply because it's Monday morning, the markets are quite erratic, and I just want to kind of get in, get out, and then reassess it tomorrow. Okay. Okay guys, I've kind of killed this on purpose. Anything that goes up that quick will come down that quick. And I kind of expected that an hour ago. It's now 8:15. And I don't want to get caught on the wrong side of a drop. Why? I'll show you. Because of this here. Markets try to fill gaps, and it had a go at coming down. The levels in place stopped it, which was good, because if it had gotten through this, I'd have been looking to kill this off, because my theory is if it closes that gap, it's going to continue down to here, and that'll be too much. And as we can see, that's reversing roughly around where I killed it, and well, sod's law, it's bouncing back up. But what you got to remember is, guys, we are here to be paid, not be heroes, and it's that simple. I'd rather have 80% of a winner than 100% of a loser, and it's that simple. And again, there you can see the hammers forming in. Now that can slam down and then continue, and it's what these markets do. They flush out all the time. So 17.18. All right, I could have had better, and I'll make a few notes on that, but I could have had it a whole lot worse. So we've got 17.18 to add into the pot. Just like so. And I made a little note to myself. Trying to get in before 7 o'clock seems to be, each time I've had a hard time of it, seems to have had an entry before 7 AM. So maybe start the process at about 6:30. That gives you half an hour to analyse the chart, see what's going on, and then look to place your orders in or around 7 AM. And then see if it plays out. And then that way you mightn't sit on quite as much heat as kind of what I've done this morning. It was inversed, and it was a little bit, let's just say, I'm not going to say stressful, but a bit of a nail biter, because I genuinely thought I had it wrong this morning for a good while, but I had my levels in place where I knew I was going to get out, and I had to stick with it, you know, because otherwise I'm letting the emotional sort of context take over. And when I killed this off, you could still say it was emotional context, because I was very wary of the trade, shall we say. But I was also looking at my other screen to see what was going on, and I could see the long tails coming in on the smaller time frames, and that gives my mind the thought of, this is going to bounce back. And if it bounces back, well, you've just seen how quickly this accelerates. All of the gain that was there could have easily evaporated, and I didn't want to give it back. You know, I have a kind of a little rule in my head that I try not to give more than 50% away of my profit. So if it's running at 10 quid and I'm quite happy to get 10 quid, and it starts coming back on itself, as soon as it hits that fiver, that's it, pull the plug. Because who's to say I can't go back into market if I think I'm wrong? Simple as that, guys. So there we go. We'll do it all again tomorrow. And as always, go down in the description. You'll find some good links that you can use. There's 5% off the prop fund that I use. There's also a good broker, Black Bull, currently 500 to 1 leverage. And if you use the link, you'll get free education, and I'll extend that by giving you some of my time if you drop some money in and just trade it. That way I can see that there's a bit of commitment and adds a little bit of value for you. So with all of that, guys, trade well, keep that risk managed, but above all, do what you love and the money will follow. See you all in the next one.